Hello and welcome to today's edition of Charting the Markets with me, Sean Mearson, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have that all-important ECB refinancing rate decision. That will be followed by a monetary policy statement and press conference. We do have some data coming out of the US as well in the form of more inflation data, PPI, core PPI, as well as that retail sales data. So lots to watch in the afternoon or early afternoon today. Let's look at some charts. Starting off where it does all start is with that US dollar, the dollar index. At the moment, looks like that longer term trend is moving to up. We've talked about it being sideways now, but we are starting to make higher highs and higher lows, and we are trading north of that 200-day simple moving average at this point. We've had a push to a new short-term high, and we've had our first pullback to find support on what was previously resistance, and that's at high at 104.10. So as we move into today's rates decision of the ECB, obviously the euro has quite a lot of influence in the dollar basket. We'll see how this candle plays out. I think if we can get a strong close on today's candle, I think that would suggest some more gains for that US dollar, for the dollar index, and we'd start targeting a move back to 104.80, and then possibly if we get through that, maybe even 105.30. Now, in that scenario, we look at maybe having a close below this 104.10 mark as a stop loss indication. If we don't get that confirmation today and we see the price actually coming off and breaking below the support level, then 103.15 becomes a target. But because of this short to medium-term trend bias is certainly up at this point in time, I wouldn't be looking at shorting that move, but rather waiting for that weakness to play out. Now, looking at the euro dollar, interesting picture here. So we can say, oh, this trend is definitely the uptrend for euro dollar, euro strength, dollar weakness has been broken. And we're trading through that 200-day simple moving average, and it's pointing sideways in suggestion of a longer-term sideways trend at this point in time. Now, we have had a bit of a reversal of that 1.0685 level, and the price is grinding, has been grinding a little bit higher. Now, I say grinding because that move higher does take in a bit of a slow move up relative to quite an aggressive move down. That could be a bit of a bear flag formation. Now, we are quite close to support. And so if we do see a break of this lower flag, I think that's not enough because that target is quite close. So we want to see a move below that 1.0685 mark before we start targeting these lower levels. And probably a level there in about 1.0632 before that 1.0513 level. So there is a bullish rebound. Well, there's a rebound off support, but it looks cumbersome. I'm going to wait to see how it plays out. I think if you are a bull, might be, and you're looking for long positions and prefer long positions, maybe waiting for this break of this trend line before considering that and targeting a move to 1.0855. But we'll have some action this afternoon, depending on how the ECB moves on that refinancing rate. At the moment, expectation is in favor of them pausing lending rates, but there is still that a decent probability chance of a 25 basis point hike. I think if we do get the hike, probably see some strength coming into the euro. If we go with consensus, maybe a bit of weakness. Let's see. Moving over to cable now and looking at the pound versus the US dollar. Now, we are resting on that 200-day simple moving average for the pound versus the US dollar at this point in time. So we've had a bit of a grind down. So we can argue that, well, certainly that longer-term uptrend that we've been talking about is coming under pressure at this point. I think what's relevant right now in terms of a short-term bias, and I think there could be an opportunity to trade in either direction, is waiting for a breakout. Now, this gray shaded area here is a bit of a short-term consolidation, a very short-term consolidation. You can see the market's just trying to find direction. Just happens to be around that 200-day simple moving average as well. So looking for a move above that upside, break above here. So well, the trend, longer-term trend is intact. Target to move back up to about 1.2745. Now, for breakout, I like to see a close above a level, just see the price settle above a level rather than an intraday break. But filters will vary depending on traders. That's just a criteria for me. Now, in the event that you do get an upside break, you might want to look at having a stop loss. I think somewhere in the midpoint of this range. I move below the midpoint of this range. In the downside breakout, we're looking at 1.2434. So if we close below that, that could be the short-term downside directional commitment. And we look at 1.2300 as that target from that move. in the same situation. If you're looking at that, maybe having a stop loss, I'm going to close above that or move above that midpoint of that range in the event of a downside breakout. But watching the levels right now, looking at that short-term consolidation, waiting for the price to show us which direction it wants to go. At the moment, that short-term direction is sideways. Moving over to some indices now, and starting off with US Tech, or the Nasdaq 100. Now, long-term trend is still up for the Nasdaq 100. Longer-term trend, the Nasdaq has been one of the, has been the best performing index globally amongst the major benchmarks at this point in time. Now, while that longer-term trend is up, in the short to medium term, I'd say that we're in a sideways consolidation. So the price is not really making higher highs and higher lows. It's just kind of drifting sideways. And we do see, we can argue that range probably sitting between 14,660 to about 16,000, maybe a little bit lower, 15,930. The point is we're sitting in the middle of that range right now, which does become quite tricky. But because there's a longer term uptrend in place, I still look at keeping a long bias to trades. Now, this very short term, I think, is also a bit of a range. It's a difficult, it's a grind at this point in time for that Nasdaq. But certainly, if we had a downside breakout, look at waiting out weakness and looking for a bullish reversal of one of the lower support levels for long entry, it's provided we stay above that 200-day simple moving average. I think for new long entries, I think we have conviction as a reversal of this 15,250 level. So to seek some conviction, I'd like to see a bit of a stronger close above that, maybe above this sort of resistance here, 15,630 is one, but maybe a bit more conservative, 15,500 odd. We want to see a strong push on today's candle, see a strong break before committing to new long entries. In the event that you don't get that, you get a downside break. My preference is to sit on the hands, wait for that weakness to play out, and look to find long entry at one of the lower levels on a bullish price reversal. Moving over to the S&P 500, and very, very similar looking picture, and the same principles do apply. Long-term trend is up. Over the short to medium term, we're in a bit of a sideways consolidation. We seem to be in the midpoint of a range. That range we consider between 4,330 and 4,630. The midpoint of that range is somewhere around about 4,460. Price is kind of balancing on at this point in time. So I want to see a bit of a stronger commitment for renewed gains. See the price actually reversing or pushing off this level, using it as a platform, a strong close. Just a long, when I say a strong close, it's a long-bodied green candle, just to show that there is some momentum in that particular move. Because of the long-term trend, long bias is still preferred, especially for trend followers, with trend followers in particular. So if there was the event of a downside breakout, look at this lower level, somewhere between 4,330, maybe even a little bit conservative, 4,360 might be areas to consider long entry. If you do have a move lower, you want to see that move lower just sort of coming to an end with the price just ticking back, which would be a bullish price reversal. So like a bullish engulfing, a bullish harami, any of those candlestick patterns, which are obviously fancy names, really just showing you price has been moving in a direction and is ticking back, which is saying hence the term reversal. All right, looking at the Germany 40. So I think we've actually moved into a longer term sideways trend here, where we were talking about a longer term uptrend and a short to medium term sideways. At the moment now, we are in a bit of a sideways, longer term sideways environment, as that price has now started whipsawing back and forth through the 200-day simple moving average. Now, I think key levels right now, sort of the range, the main range is between 15,485 and 16,330. We do have some resistance in the middle there, sitting about 15,990. At the moment, because it's sideways, we look at long and short positions, depending on where the price is and what it's doing relative to the levels. At this point in time, we're closer to support. So I don't think it's a level to short right now. I think guys looking for shorts might wait for a breakout. See the price closing below this 15,485 level. Alternatively, we want to see the price actually a bullish reversal for long entry here, which I think would be saying that range is being maintained. If we do have a downside break, I could say that the short to medium term trend has moved from sideways to down, and that's why we're watching this level 15,485. But for long positions, we want to see a nice bit of a bullish reversal off this level 15,400 before targeting 15,990. Short positions might look for a break below the support. If you do have a break and a push below it, then you discretion where to put your stop loss is something that really needs to be considered. Maybe above a one-day high or two-day low two-day high might be a consideration. Right, FTSE 100. Now, this is an example of a market that's been in a sideways, longer-term sideways range-bound environment for longer points in time. It has been conforming quite nicely between the levels, and if you look at previous week's guidances, we've 7,410 was the last bit of a bullish reversal we saw, straight to that for 7,560 mark, and we're testing a breakout at this point in time. So price is moving above that level. You want to see that price close, more or less where it is right now. And then we consider 7,700 as that next upside target, as it's acted as resistance before. Now, in that situation, again, as to where you'd put a stop loss if you were trading a breakout between that level. If you have a long-bodied candle, sometimes the midpoint of that candle could be a consideration. Below a one-period low, provided that stop loss is not considered too wide relative to your expectation for profit. I don't think in this situation, if it ended like it is right now, that would be the case. But that, the one-day low here would be sitting about 7,520 odd. So you'd be looking at 60 points in search of, about 120 odd. So a risk of £1 relative to £2 reward. All right. So moving on to commodities now, and starting off with Brent crude oil. So Brent crude has moved. We've talked about how this trend has changed, moved from being in a downtrend into a sideways trend, and now we've started taking out major highs. I think we've now moved into an uptrend for oil, certainly in the short to medium term and possibly long term. Right now, that's suggesting keeping a long bias to trades on the commodity. If you're a trend follower, but we are overbought in the short term. So that's saying, well, we've had quite a big push here. We'd like to see a bit of a pullback. If you're looking at getting long, I consider waiting for a pullback from overbought territory to one of the lower support levels before committing to a trade. So if you're already long and you've traded these breakouts, you might be trading a stop loss below a one-day low or a two-day low, depending on threshold for a risk. But at this point in time, we overbought. My preference would be to wait for a bit of a pullback to one of the lower support levels, and we could go all the way down to $87 a barrel, even without considering that trend to be changing. And looking for that price just to tick back, pull back to end with a bullish candlestick reversal, price reversal, looking for long entry again, and then targeting our levels on the way up. Current high sitting about 92.40, a longer term target there sitting about 95.40. Obviously, oil is one to watch at this point in time. Is fueling some inflation worries. Obviously, inflation guiding monetary policy across major economies. Gold. Gold has moved into broader sideways consolidation, so we're looking at trading between levels. We have had a very brief consolidation and now a downside break. That consolidation between 1931 and 3, which is the lowest support level, which is relevant for what's happened right now. Close below that, and we are looking at targeting a move towards 1895. Get through that, possibly even 1875. Traders are short, might consider having a stop loss somewhere in the middle point of that range, $1,920 an ounce. But there is a short-term momentum, longer-term trend sideways. So we're trading between levels. Short-term, we've had a downside breakout. We're targeting a move back to about 1900, 1895. Now, platinum. Sideways environment as well. So at this point in time now, we've had around this 875 or just above that. Seems to be a good area to accumulate platinum in the past, at least for rebounds and short-term rallies, with two levels, 920, 940, and recently 980, which has been a target of ours recently. We've exceeded it, it seems to be, and we seem to have respected that level. We are starting to look oversold near support, but I am concerned that the price has made this bearish price reversal here, just off that 1920 level. So for me, prefer to look at a bit of short-term weakness, further weakness, maybe to about 890, possibly even 875. Looking for that weakness to end with a bullish price just ticking back with a bullish reversal before looking for long entry. Alternatively, long entry, if the price was to rally from here, close above 920, could be a consideration for long entry, targeting a move to 940. You don't want to see that 875 level break, because that would suggest that it could be moving into a longer term downtrend. Right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Thanks for watching.